We have on the show Mohit Gang, who's a CEO and co-founder of Moneyfront. Good morning to the show. Welcome to the show, Mohit. October is doing its thing again. You know, the kind of volatility that we are seeing in the past, couple of weeks. What's your overall outlook on the market at this point in time?
Hey, hi Suyash, always a pleasure to be on your show. Look, I think for reasons well known or not known, I think October is always called a bloody October, right? So, and it's doing its course out here. However, the script is more getting played outside of India than within India, right? Within India, you don't have a compelling case for a correction. Perhaps maybe an outline case on valuations getting stretched on the mid and small cap side. However, the global script doesn't seem to be falling favorably, especially the the rise in crude oil prices, which is more so because of the geopolitical escalations or tensions which we are seeing. However, it hasn't shot past a psychological barrier for India as of now, which I would put it at around $100 a barrel. At around 90, 91 odd dollars, we have been struggling in that range. But somewhere it seems if the escalation were to rise up further, then perhaps we might just see that tag of $100, and that is what is playing out in the markets. And the US 10-year yield, which is at a 17-year high of over 5%, is something which is like really weighing on all the emerging markets, not just India. And I think if the yields don't ease off out there, we might see some exodus on the FII flows. So these are the two things which have been like really playing havoc on the markets of late. And as I said, the valuation story has been catching up. But to counterbalance the same, I think we have the positive DII story, which has been extremely robust, extremely steadfast in terms of flows and everything. And also the festive season and the festive season, the cheer which is all around. I think the consumption story doesn't seem like it is dying very soon in this country. You have the Navratri and then the Diwali and then leading right up to Christmas, and plus coupled with all the festivities, we have the World Cup, right? So I think the consumption story is fairly robust. The earnings quarter this time around has been bit in line with expectations. No major big surprises out there as of now, but yeah, I think could have been better. But I still will take it as a positive on the base at which we are going. So all in all, I think the domestic story remains robust. Global macros is something which all of us need to watch out for, and which can play a bit of havoc in the market for a short while. My sense is for next 1 month odd, I think everyone needs to be a little cautious on the market given the way geopolitical situation is shaping up.
Hi Mohit, Amit Ranjan here. At the current levels of 19,200 to 19,300 on Nifty, how is the market priced valuation wise? Can long-term investors initiate fresh positions, or should they wait for more corrections? What are your views?
Look, honestly, I think to put a peg on the overall market is a little difficult out here. The mid and small cap zone might seem a little stretched, honestly, though on the median valuations for last 10 years, where they continue to trade at a certain amount of premium to the large cap index, I think that gap has currently increased, not because the mid and small caps have significantly outdone themselves, but because the large cap index has underperformed to a fairly large extent. If you see the Nifty 100 companies, 60% of those companies have actually been in a negative zone or have delivered less than single digit returns in last 1.5 years. And that's been the major, what do you say, story to my mind. I think there is enough and more potential in the large cap space. If you see just the top 100 companies of Nifty, I think bulk of them and very big names, in fact, the entire IT pack, large cap, the Reliance Industries, HDFC Bank, Axis Bank, their names galore, Wipro, right? So there are names galore who have actually just not done anything for last 2 years put together. So my sense is there's a lot of value on the large cap front right now. On a relative basis, the trade seems more favored to a large cap. Plus, I think with less volatility, investors will be more comfortable entering that space right now. And if you were to ask my pick, I think I'll rather move my trade towards large cap as of now.
Now, Mohit, PMI data coming from the Eurozone suggests that the entire bloc is, kind of shifting towards that recession. US is also facing recessionary headwinds. The data or the macro data is coming out is all right, but you have high cost of borrowing and elevated gas prices over there. in light of all this, what are the potential implications for the Indian economy if the global economy does in fact fall into a recession? Because currently we seem to be doing all right, but what could be the contagion effect?
Look, Suyash, I think there are three things, and as Benjamin Franklin rightly said, that taxes, and I'll add corrections in the market, these are inevitable, and one has to really brace up for those. And I think Indian investors long reaped a secular, as in for last 1.5 years, we've all been in a secular kind of a one-way up rally, right? And investors have really made money. But however, the nature of markets is such that we have to brace up for a correction. And my sense is one is just looming large on us in terms of the way global macros are shaped up. You are right when you point out that the Eurozone has its own struggles, and US also on and off, the signs are mixed out there. However, there's no clear indication which way the US is headed. I think market is more watching whether the landing in US will be hard or soft. And I think that's the only thing, whether Fed continues to keep rising rates and prepares US economy for a hard landing, or they were to pause, take a calibrated outlook on the economy, pause for some time, and maybe take the economy to a soft landing kind of a thing. So that's the only thing which market is watching, and I think US perhaps will give us the biggest trigger point in next 3 months or uh, right. And I think one of the first things to look out there is the 10-year yield and the signaling by Fed, right? So if we have these two things right, then I think more or less everything will fall in shape. However, as I said earlier, Indian economy cannot be isolated. We might boost that our global whatever our consumption story is fairly robust, local manufacturing is shaping up, so on and so forth, and domestics are looking very good. However, we are coupled to a large extent, as all emerging markets are. And if US were to have hard landing, then I think the impact will be there to show on Indian economy as well. So my sense is, as I said previously, investors should take a very cautious and precautionary view of the markets for at least a month or so, if not a quarter. Let the result season pass by, let some festive cheer go down, and let's see how the geopolitical situation shapes up. My sense is the geopolitical situation is on the verge of escalating. It's out there. I think Israel is about to intensify its effort on the ground, and everyone wants to see once Israel enters the
Right.
region through ground forces, how will the other neighboring countries react? And I think that will give us a lot of indication on how the markets will shape up further. So my sense is that those first next 10-15 days are extremely critical for all of us to watch out in terms of how the geopolitical situation braces up. And yes, you cannot just put India in isolation and say ki nothing will happen because our domestic story is strong. I think any kind of a geopolitical rupture,
All
moving on to oil and moving on to US yields will always have an impact
All
on
right,
India.
Mohit.